So I was looking at the systemic risk. So whatever happens with the IPO, what if WeWork goes under? Is it just isolated to WeWork? And if you look at New York, so it's over 5 million square feet of office space. There are at least 18 buildings where they make up more than half of the total space in those buildings. And by the way, when they lease a building, they do it through a special vehicle. It's not WeWork itself. WeWork only guarantees 11% of its leases, and they have $34 billion worth of long-term leases. So when you spread this out over all these buildings, all these millions of square feet, you then wonder what happens to the developers and the lenders to those buildings. So there's a lot more at risk here than whether WeWork comes in at 47, 20, or 10.
It's a great point, Scott. It does, though, affect how much money they can raise at the IPO. How much money do you think would calm some of these concerns?
Well, I think the big problem with WeWork isn't the concept. I think WeWork is a fantastic concept that's revolutionized how people use office. In fact, our own London offices are in a WeWork asset. There's a couple of problems with WeWork. The valuation at $47 is literally absurd. That's equivalent to the value of Marriott, which owns 4,000 properties around the world and trades at 9 times EBITDA. And so it's no wonder that you are getting pushback from the market in terms of that $47 billion down to 10 to 12 billion, because the problem with WeWork's business model is the structural risk of having long-term liabilities, which are 10 to 15-year leases that they have to pay, and they chop those up into short-term receivables. Their average lease term's only about 15 or 16 months.
Right.
So what happens in a downturn? We know what happens in a downturn.
Because
their receivables go away, and we saw it before with Regis.
That's exactly what I was going to say. So Regis, which is analogous to what they do in this business, correct me if I'm wrong, went belly up during the financial crisis.
It went belly up actually in the early 2000s, I believe. But WeWork is different than Regis, okay? It's a better model than Regis. They have a network effect. There's 20% of their revenue comes from things that aren't just rent. So it is an excellent business model, but at the heart, it's more similar than different than Regis.
Yeah.
And in a downturn, we know what happens when you have long-term liabilities and short-term assets.
And Robert, he's also highlighting, Scott, is that this could make existing landlords more vulnerable during downturns as well. So we've focused a lot on WeWork itself, but it's the people who are exposed to them where perhaps the next layer of focus goes to. And again, this isn't just to say how the IPO goes. This is to say, what are the new risks in the commercial real estate space now that there's such a major player in it?
Yeah, look, back in 1999, everyone was looking at some of these .coms and just say, okay, if that goes under, not a big deal. What we missed was the ecosystem that were built around these companies, including in California, all the office space, which just cratered because we didn't realize how dependent all these other companies, media, office space, were built around the infrastructure of these .com companies. And when it all came apart, it had a much bigger impact than we expected. And that's why I wanted to signal it here, which is not just WeWork. It's all these developers, all the lenders to those buildings that are vulnerable.
And Scott, you think their IPO can go just fine if the valuation, is reasonable enough, because all of these questions just get kicked out till, basically the next downturn?
Well, WeWork needs the money. They've got $2 billion of cash on hand, and they're burning $2 billion a year in expansion. So, they have to do something by Memorial Day next year. I agree with what Robert was saying, and I think that the early 2000s is a very good analogy of how this could play out if we go into an economic downturn. What's going to happen? In the early 2000s, you had all this sublease shadow vacancy that was on the market because all these tech companies had leased too much space because they were going to expand.
Right.
And I think you'll see a similar thing happen in the next downturn. And in fact, that's why if you look at the publicly traded REIT market today, it's pricing office companies at a significant discount to private market valuations because I think they're pricing in a lot of that concern.